The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the December 15th. Fantastic Friday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstance of these markets. We get to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, and more importantly, I'm here to serve you. So feel free to pick up that phone, dial on in, 877-927-6648. If you can't dial in, let your fingers do the walking. Go ahead, send me an email, steve@tfnn.com. Inside that subject heading, please put radio show question. And, of course, inside the Tiger's Den, well, any ping will do. So let's go ahead and get this show started on fabulous, fantastic Friday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, the Dow trading up 139 points. 24,647 is the print. S&P's up 23 points, 0.9%. NASDAQ 100, 1%. That's 64 points. Russell 2000 up 1.5% or 22 points. To the downside, you've got, what do you have to the downside? Individual stock-wise, Ryanair Holdings. That does not look good, down 6% or $7. Credit Corp, that's BAP as a ticker symbol, 3% or $6. Charter Communications off $6, 3%. China Internet down nearly 12%, about $6. A lot of sixes out here. To the upside, it is Google. Google is trading over a swing point with volume, so it's off to new highs out there. It's up $12.50 as we speak. Volume so far behind the move 1.3 million shares. Long Fin. That must be an IPO, so we won't go there. Intuitive Surgical up 11.40. Priceline up $10. So there's individual stocks to look at, and thank God it's Friday as well. To you, Jay. Hey, let's go to our first question. The first question comes in from Cindy, and Cindy would like to know, is there any chance that the tax bill that looks like is on its way to being released to us, so we can see what's in it at 5:30 today, is there any chance, Steve-O, she said, that this could be a sell the news event? And the answer is yes, absolutely. 50-50 chance. Market's either going to go up or it's going to go down, right? No. Let's take a look at the reality. The reality is absolutely. Now, when I say that absolutely or that is a reality, that doesn't mean this is the end of the bull run. It just means this could be a sell the news event. Now, I would only say that to you, Cindy, and everybody else out there, if I saw some patterns that were in play that suggest that that is a possibility. Now, you might say, just like I would say, what in the Sam heck are you talking about, Steve-O? Well, what we can do is just go take a look at a number of different charts out here. So we'll see the NASDAQ composite up in new all-time highs out here. If we just simply update this screen, you're going to see a black, you'll see a number of lines out here, but you'll see a black diagonal line that really all began with the trading session of November 6th. November 6th out here is when we saw the relative strength index at its highest point in time. And when I say in time, I'm not talking historically. I'm just kind of this period that we're looking at on my screen out here. And price continues to move higher with less relative energy. Now, the sell the news event, no, I'm not saying today, but Monday, it is an absolute possibility because this pattern shows up when the market gets stretched. Now, can you sell this pattern? No. Please don't do that. Don't ever do that, because then you wouldn't be properly utilizing this pattern out here. So the NASDAQ composite up at new all-time highs as we speak, has that stretched look to it. If we go, and with regard to the NASDAQ composite, although I believe the advanced decline oscillator reading is now above zero, let's check in and make sure here. It's not above zero. The reading is still minus 0.7. That's the second panel from the left on my screen out here. So it's an odd set of circumstances. When you're up at new all-time highs inside the NASDAQ composite, you've got the stretch pattern that we just took a look at, and the advanced decline oscillator reading is still down below zero. So there you go. As Gus would say in my big fat Greek wedding, number one, and maybe even number two. What else do we have to take a look at? Well, if we take a look at the Dow transports. So we'll just kind of go through this just so you can understand my logic and my thinking here, although it's kind of illogical, but that's pretty logical. If we take a look at the transports a couple of days ago confirmed one of these patterns when it formed a shooting star. It seconded that motion yesterday when you had a bearish engulfing candle. Price traded lower. However, price never traded below Stevie's red line. How important is that red line? Mucho grande. Now, I'm not talking about ordering at Starbucks. I'm talking about this is extremely important out here, because if price doesn't close below that, there is no way that it's giving you any kind of bearish signal. It just doesn't work that way. And what we can see the transports have done thus far, they have bounced off of that red line. Yeah, you can go down below it, but bounced off of it. 10,328 and change out there is the number. But nonetheless, the transports have already confirmed this pattern. They haven't confirmed jump on the sell side, but if price were to close below Stevie's red line, that's a whole different meaning out here. So again, just trying to answer the question, could this be a sell the news event? We haven't answered if it is, where do prices head to? And we can also answer the other side of the trade. I don't want anybody out there to think that Stevie is just a bull. That's a bunch of bull out here. We always have to take a look at both sides of the trade. If we take a look at the Wilshire 5,000 or Wilshire 3,500, how many of our stocks are really in it, you've got a couple of different patterns. Today, new all-time high. You still have price moving higher, doing less relative energy. You're in potentially leg number G. You know how the market likes to sing in that key of G out here. So you've got that pattern going up. Price, though, above 27,629. That is important out here. But yet you're showing, this would be normal whether it was a tax bill or it wasn't tax bill that is out there. So don't get too caught up into the head fake that even if this does turn out to be a so-called sell the news event, even during this favorable seasonal cycle, and we are really in it. Now, please, you have not heard me one iota say jump on the short train out there. If you do that, you're doing it at your own risk, and you're truly misinterpreting anything that I am humanly possibly saying. I'm just, for all of those that are just in the super bullish camp out here, you just have to beware. This is like driving down the road and seeing caution signs out there. And, eventually you run into a detour sign. No detour signs just yet, only caution. Now, this was the New York Stock Exchange. Did we talk about that? No, it was Wilshire. Here's the New York Stock Exchange. Same pattern, confirmed 2 days ago. You actually had the follow-through and a close below Stevie's red line yesterday. And the New York Stock Exchange is saying, I don't know. Now, hey, back above Stevie's red line, things are in pretty good shape. 12,672 is the number there. So when we come back from this break, we'll just kind of continue to answer that question. We'll look at the Dow Jones and answer the question why, if this is a sell the news event, it's not the big one. Steve Rhodes with TFNN.
Hi, I'm Steve Rhodes, host of The Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. So we're trying to answer the question for Cindy. Is this possible? Is it possible that this is a sell the news event, that referring to the tax bill out here? And we have a number of different charts that have one of these potential patterns that you and I need to keep our eye on. And it's really about when the market just simply gets stretched. The market's like a rubber band. In this case here, for a number of the indices you and I have taken a look at, according to Stevie's set of tools out here, the market has stretched to the standpoint that if the cavalry were to arrive, we wouldn't be surprised out here. Again, do not step in front of this bullish train out here. And when we went to the break, what I said was, even if this is a sell the news event, and I don't know the answer to that, I know what to be looking for. You now also know what to be looking for. Inside the Dow Jones Cash Index out here, you'd be looking for a close below 24,533. I'm not talking about today, but certainly on Monday out here. And that number will change a bit. Then that would get your sphincter muscle on the bullish side just a little tighter than maybe a normal out here. And the reason why it's not, or I don't believe that this is the big one out here, not even close to the big one, is because the pattern that shows up, that same pattern that you and I just looked at, where did I put that chart? If I take a look at a monthly chart here for the Dow, so a nice little segue into it. When that pattern forms inside of the Dow, we're only looking at really, in essence, three tools. We're taking a look at Stevie's stretch pattern. And if you take a look at the top that formed back here in 2007, you'll see that same pattern out here. And you'll see that you had the bears roll in on the month of November, right? So this is not about trying to sell the top tick or buy the bottom tick out here and just giving you the larger swath, the bigger view out here. That pattern was in play. It was in play in 2000. It was in play in 1987. It was in play in 1946. It was in play in 1929. It was in play in all of those years out there. And it's not even close. And got to take a look at Stevie's red line. You got to get, not you, but price has to get below that for it to have any kind of real meaning other than just simply some type of retracement or coming back to a support level. Now, support inside the Dow, it's down quite a ways. We're already 24,651. That level is 22,925. And if the market were to fall, that would fall too a bit out here. But just we don't have the typical or the topping pattern that is present before every kind of a bear market. So really it would be a buying opportunity out here, and this is going to happen at some point in time. We are well over a year without any kind of correction. Correction meaning we'll use the Funk and Wagnalls version of it, which is 10% or more. We are now, was in 2011 was the last bear market. That's where you had a 20% or more move. And so we're 2017, that's 6 years. They happen on average right now about once every 5 years. So we're a little bit overdue. You can have a bear market, meaning a 20% decline in a bull market out here. It doesn't have to turn out to be the 2007 to 2000 variety where you have 50, 60% pullback out there. So, and all of the other things that you and I have looked at over this week, over the weeks out here, just say this market has much higher to go. Thank goodness that they're going to get tax legislation through from a stock market perspective. You're going to have companies that are going to be flush with cash, either buying back stock out there, that pushes markets higher, paying out dividends, that'll push markets higher, or actually just making more money on their income statements, which is just simply going to increase the whole Case-Shiller thing is going to be thrown out of the window, repricing as to where, people say the market is overvalued. Well, that whole thing will go to, hey, you wish I could just use my normal vocabulary out here, but you know what I was going to say out there. So this is the world that we live in. So Cindy, thanks for writing in. I hope that answers your question. And the question I have is, hey, why did my screen stop moving out there? Okay, so no other questions that I see at this point in time. So why don't we just kind of surf around and see what else we can figure out is going on inside of the markets. Let's look at all of the usual suspects out here. What do I mean? We talked about, or I mentioned to you, the NASDAQ composite. Oh, geez, yeah, so I'm having a little bit of a data problem out here because the data is missing from the bottom of my screen. So it makes it very difficult for you, the visual person, to follow along with what it is I'm about to say. Plus, without any data, I can't really interpret what the market is doing. So we're not going to go there. That could be an interesting 37 minutes or so if I don't have the appropriate data. What I was going to talk about was trying to see where the advanced decline oscillator readings were for the New York Stock Exchange as well as the Dow. The VIX. Let's go take a look at the spot VIX index out. Let's see if this chart pulls up. Okay, good. So let's put this chart up here on the screen. Here, the top portion. Now, this is a line chart. So on a line chart, we're only looking. This represents the close. Or if it's live like it is right now, it represents where the product is trading. At top panel, S&P 500. Bottom panel is the spot VIX index. What I do want you to focus on and pay attention. I think yesterday we talked about how perhaps one of those things, curly, one thing to be paying attention to was going to be that yellow line on the bottom panel of my screen, the spot volatility 50-day exponential moving average. Price closed right on it, or very close to it yesterday. The actual closing price yesterday was 10.49, and the 50-day exponential moving average is 10.50. It's an amazing tool out here when you actually put it to use. You might say, what? Yeah, if price is below the 50-day exponential moving average, there's absolutely nothing that could possibly be bearish about the S&P 500. Yes, as it's moving from the bottom, the spot VIX, up towards that line, you can start to see a pullback, but that's just a back and forth. That's just kind of a normal retracement type of a deal. The real potential market erosion, I say potential because you don't always see erosion, but if you are going to see erosion, price erosion, I guarantee you that price, that spot volatility index is above the 50-day. You can go back as far as you want in history. Why does it work like that? I don't know. I just know that it does. And since it does, we can't be making fun of the 50-day exponential moving average. It really works. Well, you see the deflection yesterday, and now we see the S&P 500 trading higher. Here, you can see, just simply take a look at that yellow line and look at the top line out here, the red line. You can see when price is above it, how the market pulls back and retraces. Is there anything else out here that is a little bit suspect as we speak right now? That would help Cindy, because I know that Cindy is actually pulling for a market to sell into. That's why I wanted to spend some time and say this is not the big one. So from a trade standpoint, hey, I get it. I just want to make sure it's held to just a trade standpoint. It's not there right now at 1:25 in the afternoon, at least not as I see it. Now, the one thing that stands out to me, I don't know if it stands out to you, but it stands out to me, let's get a green line here, is the fact that if I take my green line tool and I go to the most previous how about I just say it like this, the December 11th spot volatility index close, and take it to where we're at right now, you're going to see a bit of a little diagonal, meaning we have a higher low as we speak right now. And if I take that same green line tool and I go to that same day out here, what we're going to see is that we're going to see that price inside the S&P 500 is higher. That is what Steve-O likes to look at as a bit of a divergence that, if it continues, tells us that there's going to be some type of retracement out here. Doesn't tell us when, but it's one of those things that could add to Cindy's, hey, Steve-O, is there any chance this could be a sell the news event? Now, you got to close below that session from December 11th. To the moon, Alice. Steve Rhodes with TFNN. Be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live, and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back. Dow's up 140, S&P up 22 points out here. So other things to, so let's take a look at that other side of the trade. Why would this not be a sell the news type of event out here? Why might those potential patterns really only just be potential, you know, like a weather forecaster here in Florida, basically saying that, you know, we got a chance of rain. We have a chance of rain basically every day. That's why there's an ocean on one side and a Gulf on the other and big tributaries in between. And so we always have a chance for rain out here. But if we take a look at the chance for rain in the stock market, one of the things you and I would go take a look at would be the daily TAS market profiles. Why not? If you go take a look at them, you're going to see the 4 equity futures contract. You're going to see that each of the daily sessions, meaning the last bar on the right of each of those charts, they're all green. Green shoots, so to speak, out here. That means everything is trading above the top of its box. The top of its box is a level of resistance. Old resistance becomes new support. Now, the one on here that perhaps is of most importance to each of you out here are the small caps. Russell 2000 has been trading inside of the range of 1508 to the top of the box, which is 1531.60. Our man Ron in Denver, I think he's got some options that expire. I think they were this week, today, as a matter of fact. And what we talked about was he needed to see, this was days ago, right, last week or something. He really wanted to see price close above that 1531.62 out here, and it was because that was a level of resistance. And all that has occurred inside of the Russell 2000 since the trading day out here of December the 5th, the day that it created that little orange bar. I'll move my cursor now. You'll see that is when it formed that new profile. And all prices done inside the Russell is traded inside that range. I don't know where the Russell is going to close today, but if the Russell 2000, which arguably stands to benefit the most from really 2 things. One thing is higher interest rates, because financial sector is the highest weighting inside of the Russell 2000. I think something like 13% of the issues that are inside the Russell almost 2000 are financial related issues, as well as the tax benefits of corporate tax benefits out there. They'll certainly see not every corporation inside there, but they'll certainly see the benefits of that. So a close above 1531.62 would be very bullish from a daily perspective. But look, we always have to look as we're flying around this globe. We have to see, hey, what's going on up top? What's going on at the level up top? So that takes us to the weekly levels out here. And again, we've got the 4 equity futures contracts. And what you're going to notice is that the Russell 2000, right now as we speak, is trading right on the resistance level, 1518 to be exact. We're just slightly above it. I do have a 10-minute delay, so I don't know if we're above or below. But if you got a nice close above 1518 today, then you'd have a breakout on the weekly, so to speak, on the daily. You have that. You've got a brand new weekly profile inside the NQ this week. That was a bearish profile. It's breaking above that. So the message here is, I don't think so on the sell the news event. This is more like a what happened to the markets when quantitative easing was first put into place. Because certainly this is a quantitative easing type of event, right? I don't even know what the actual dollars are. Well, we know that it's trillions, right? Trillions of dollars in potential repatriation out there. So I know that's a big impact to the cash out. Probably a larger impact than quantitative easing itself. You and I know that the quantitative easing has been nothing more than a shell game, right? The people who say, the balance sheet is $4 trillion or whatever it is, you know that that's a lot of BS, right? Yes, the balance sheet grew by that, but most of that are cash reserves that don't get out anywhere. That's why we don't have any inflation. Or one of the reasons why we don't have any inflation. That was just a confidence game that was out there. So if you really take a look at it, the real impact to the markets with regard to businesses wasn't quantitative easing. What this would be much larger than that. Yeah, much larger than that. Which just simply goes and says, hey, that figure you threw out there with regard to, hey, where's the Dow going, Steve? Earlier this week, John in the Tiger's Den, Mr. Z and I were talking about that, or I think we were talking about that, or we should have been talking about that. I'm pretty sure we talked about it. I'm just trying to find where I put that actual chart. This says that the Dow is likely headed to 30,740. Yeah, we're only at 24,650. I say only. Should we pass these 1,000 marks out here, basically weekly, so it seems. So And that's the Dow. The Russell 2000, I'll have to do some real work over the weekend to try to get its real potential out there. Although I think we can do it. I think you and I can do it in what we would call a heartbeat. One of the ways that you and I can do that is just simply by going and taking a look at the IWM, let's put it on a quarterly basis out here. Let's add our A to B equals CD tool. Right, so we already know that the breakout on a monthly basis, weekly basis was with volume. We had a Denner that was asking about volume. If I go ahead and add, I think we've done this before, but if not, we're going to do it right now. We'll put the A to B equals CD pattern in here. And when I say volume, I was looking at this swing point out here from a monthly standpoint that is in April of 2015, 1.8 billion shares was passed with 2 billion shares. So we have a swing point inside of the Russell 2000 that was taken out with volume. So as we go take a look at it, we go add the A to B equals CD pattern to it. We'll go ahead and put this on the screen. That's the small one. Let's go take a look at the large A to B equals CD. It looks like this, and it's much clearer when we go ahead and we put this on a quarterly chart out here. So if you were to say, hey, where's the IWM headed to? 188.48 is the first level of the A to B equals CD area. Is that where it's headed to? Absolutely, positively not. 214.28, 247.09. Those are the levels where the Russell 2000 is headed to. And this will be, so it already had a nice confirmation of that move in 2016 out here. Just so happened it was during that last quarter, so it was after the election. That's how much conviction that there was. It's not me that's the Super Bowl, Mike. It is not me. It is just, and rightly so. One of our Denners, what was the Denner's name out there? I got to go back and look at it. Harley Krishna. I swear, Harley Krishna. I love it. We got to hook you up with our friend that's in Nepal right now. I love it, by the way. Love the handle, so to speak. And it's just the spot. It's just the charts. So he was asking about, or she. I take that back because I don't know what Harley Krishna is. I get the concept, though. Why didn't I have volume on my charts out there? And those charts where we take like a price moving higher, less relative energy, and so forth, that's a tool that I created where you do not need volume. It is irrespective of volume, if irrespective is an actual word out here. So for those of you that are true TFNNers, and volume is important to you, how can you ignore this? How can you ignore that you have a confirmed A to B equals CD to the upside inside the Russell 2000? It is not. Yeah, I would have to ignore everything that you and I have learned together. And I'm not going to do that. You're not going to do that. So, yeah, Dow 30,000, Russell 2000, we'll just say IWM, 214, 247, 283. And you're at 150 right now. Steve Rhodes with TFNN. We'll be right back.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A share bull and bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan Logan's most recent webinar, How Price, Volume, and Time Make Market Profile So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. So Rob writes in, says, hey, Steve, the tax bill's finished, and they have the votes as of 30 minutes ago. I don't see any selling the news, just saying. And, yeah, I hear you there, Robbie, but, of course, how do you know if a politician is lying? Yeah, so we know the answer to that one, too. So we'll just wait and see. And the actual news is when you really have the. So I'm not saying that's what's going to happen. I just wanted to be able to answer Cindy's question. You know, is this possibly a sell the news event? And I really see the possibilities that it is. You know, which is why we also want to spend time trying to identify support levels. And the only reason why I say that is because those patterns, once they confirm out there, they're excellent patterns. They're a very reliable pattern out there. And now, the pullback doesn't have to be substantial. When we took a look at those daily profiles as one example, the bottom of those boxes, and the Russell 2000, the very right-hand chart out here, is the perfect example of how those levels can be used. We've got others that use other areas, swing points or volume and things of that sort, to identify levels of support and resistance. So these market profiles on these equity futures contracts, just a wonderful tool. So we're not going to ignore it. We see how well it works out here. Does it always work? Nah, I haven't found anything that really always works out here. But with price trading above right now as we speak, the top of that Russell 2000, you know, that's breaking out. By the way, the support level right now inside the ES Mini is 26.15. Inside of the NQ, well, 63.69 is the first level, and then 62.70 is the real level, is second level of support. Inside the Dow, 24.443, and then 23.781 would be the numbers out there. We've got a request that has come in from Phil. I meant to share this with you. Comes from Dorsey. Now, this is going to be a problem. Well, I got to try to expand it up. So here, this is giving the average return for the S&P from December 30th. Okay, so first half of December. I'll have to read a second half of December. But anyways, it's showing positive returns basically here. But just something that, well, anyways, thanks for sending the seasonality piece, Phil. I appreciate it. Kind of hard to read it during the show. And my mind doesn't work that fast. Okay, so we did have a request out here to a couple of them. One was to take a look at gold. That's from Ron in Denver. Wanted us to take a look at gold. So let's go rip that puppy apart for Ron. And the first place that we'll start with is we'll start with Stevie's red line inside the gold contract. And right now, gold is trading just slightly above it. I've got to put up the data box in order to give you the correct number for the February contract. And the correct number is, you want to write this down, 1256.70. My apology. We're trading right now 1257.30. So we're trading right above it. A close above, yeah, believe it or not, 1256.70, Ron, is a bullish message. Now, inside of gold, we really have a couple of different messages out here. Let's go take a look at them. It's not going to be the A to B equals CD to the downside. If, in fact, we've got a turn. The first one we have is from the highs out here specifically being the trading session of September 8th out there. You do your wave counts on the way down. And 4 days ago, trading day of December 12th, was a seventh wave move, letter G. Oftentimes, where you see the most significant changes in trend out here. Not always, but often enough that you and I just don't ignore this stuff. So there you've got a potential bottom. That day also happened to be a Tom DeMark combo count. That is the number red 13 that is on my screen. So you got two patterns out there that are worth paying attention to. Now, in the Tom DeMark system, in order to get a confirmation, you have to have a close above a bar 4 days earlier. Well, if we just count back 4 days, 1, 2, 3, 4, we're trading above that. You got a confirmation of that yesterday. And so this is suggesting to you that there is a turn. You've got those signals out here suggest that there are turns. So we start there. If we go take a look at our profiles, right, we've got a bit of a conflict of information out here. Which one is telling us the truth? And the conflict is just simply that you have a daily, let's get rid of this out here. What you have is you have a daily set of profiles just formed a couple of days ago, and the top of that box is 1259.40, just $2.20 higher. If gold were to close above that today, Ron, close above the top of the profile, you'd have a third reason for gold to give you the message that it's ready to move higher. Now, move higher to where? Well, the other thing that it needs to really do on this weekly chart is get above or close above the short-term trend line. The trend line I'm referring to is coming off of December 12th. That's your touch point, the low there, the low of the trading day of July 10th. That's become your touch points. That's resistance. Really, the number is, forget about Stevie's trend line, you can just write the number of 1266.10 on there. That would be the nice confirmation that gold should begin to start moving higher. Now, higher, where is that? Higher is going to be 1322. Now, that's what these charts show. Let's do this for both of us. Let's go out here, and I'll still use my synthetic contract, and let's kind of take another look at it, at Goldilocks, that is. So let's do this. I said we would rip it apart, and that's exactly what we want to do. And what I want to do here is I want to put this on, let me see if quarterly, if I can get the same kind of view, same kind of look out here. Nah, I don't want to do it on the quarterly. That's just too big. It's not going to make sense to you. Let me put it on the monthly. Let me see if the monthly will help us. Does it show the point that I want to show? I guess let's just look at it like this. We have what looks like an A to B to the upside that is forming out here. If those other things come to fruition, I don't have the A to B equals CD tool. Let me go ahead and insert that study. Give me a moment to do that. Takes just a minute. And if we take a look at it, here's what gold looks like it is doing. And I'll give you a wild. So the A to B equals CD out here, just a small one, 1472. But I'm going to go out on a limb. I like to go out on limbs. If that happens, we're a long way off from that happening out here, or we're way off from that happening. But if that happens, I am going to say that we could see gold make a run to 2160. 2160. Now, the highs out here are 1988. And you might say, man, how did you come up with that? I'll tell you what, as we start to get, first we have to clear 1472. If we clear 1472, I'll come back and show you why I say 2160 is in play. In fact, it's in play, but we're a long ways away from it. So, Ron, I hope that helps you with regard to gold. The only other thing that I would be paying attention to, okay, which I am, is paying attention to what's going on inside the yen out here. Now, today what we're seeing is kind of one of those examples of where Stevie's red line acts as support. So we're taking a look at yen futures out here, which were cleared a couple of days ago and had follow through yesterday. And even this morning, we're trading higher. Right now, we've seen a pullback to just simply test that level. This acts as a trampoline, and the yen continues to move higher. So too will gold. So too will the 30-year Treasury bond. We'll be right back. We'll go take a look at AAOI. And for Danny, we just took a look at the yen. Be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's TigerTV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. So one of our generators wanted to go take a look at Applied Optoelectronics. Ticker symbol there is AAOI. And the question was, is this sketchy? Now, this is a monthly chart that we're taking a look at. And it's kind of cool because we can tie a couple things together, things that Denners have been writing about inside the den and so forth. And we can see here this thing had just simply an explosive move from 2016, May of 2016, when it was trading down as low as $8, went over to $100, went up to $100 in July, got up to 103.41. And then just simply backed off the gas. Now, when things like this, the so-called Eiffel Tower view of a chart occurs, and it's nothing more than, let's say it's called a phase transition out here, where you see at least a doubling of price in a very short period of time. And this certainly is one of those situations. When it's not really setting up a new level of pricing, that's real. What happens in these is price will pull back to where it really broke out. Now, one of the ways that you can take a look at breaking out is where you start seeing volume really increase. And in the case of Applied Optoelectronics, that's either going to be January of of 2017 or February of 2017. And if we take a look at where price is trading right now, it's trading inside the February 2017 level. Now, when you say sketchy, I don't know if you're looking for a trade on this, but the monthly market profiles have acted as support for the last 2 months out here. The bottom of that box is 38.19. So it is trying to, what looks like to me then, that explains why we see this little base building, what looks like base building, going on inside of this equity out here. So I would just watch. Doesn't mean you need to get on board. There was a small sign of strength, right? When you come up off a bottom, you like to see a sign of strength. And inside of this ticker symbol, AAOI, that first sign of strength was November 8th out here. And you're backing up into it with light volume. That was 7.2 million shares. Today, you're at 485,000 shares. So sketchy? I don't know. Worth watching, that's for sure. Hey, folks, just 1 week to go before I arrive through your chimney. That'll be a fun day. Stay tuned. Your favorite polar bear and mine, he'll deliver gifts as well. He'll be up next. Tom O'Brien, 3 to 5. Have a great weekend. We'll see you on Magnificent Monday.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.